Hi, and welcome back to the Business Career College video series. In this video, we're going to look at coordination of benefits. Now, some of you might say, well, hang on, there's already a video on coordination of benefits. True, we're looking here at the coordination of benefits with respect to disability insurance, which is a similar concept to what you may have seen elsewhere with respect to coordination of benefits. Just that it's not quite so rigid, and we don't really have set of rules for this. Instead, we have contractual provisions, and there are some rules with respect to government programs. So what we have to see here is really, how does coordination of benefits work? I'm going to show you an example of how this would play out, and then I'll show you sort of the order in which coordination of benefits will happen. So let's say we have somebody who qualifies under an individual disability contract. So this person has individual DI and they end up with a claim, and the claim is generating, just let's say they have a face amount on their disability contract, so they're getting $3,000 a month of benefits. And that's initially what the disability insurer pays them. No issue here. After some time, remember that typically individual DI is going to have a waiting period based on what you purchased, but it might be 30, 60, 90, 120, 180 days, even up to 730 days in some cases. Let's say, just for the sake of argument, that we have a 90-day elimination period here, a 90-day waiting period. So this person waited this long and now they're getting this benefit, and of course that would be paid actually at the end of the month here, so they would probably be getting this on about the 120th day. Now, we know that it's quite likely, if you've got earned income, that you're also paying into CPP, and that CPP has its own disability benefit. However, you have to have a severe and prolonged disability, and this is very difficult to qualify for. Severe and prolonged disability basically means that you're probably never going to work again, or at least you're not going to work for a very, very long time, and that your income is substantially reduced, generally less than about $10,000 a year. So you've got somebody who qualifies then for CPP disability benefits. It has a 4-month elimination period, but it's actually pretty common for somebody to take a lot longer than that to qualify for CPP disability benefits, unless it's immediately obvious that this is a really serious disability. So let's say for a period of time that this person's been collecting the $3,000 a month benefit, and then ultimately they end up meeting the CPP definition here, the severe and prolonged. So they end up now qualifying for a CPP disability benefit, which would be about $1,200 a month. Let's say, for the sake of argument, that would be pretty typical. So what happens is the insurance company will actually recognize this. They say, hey, this person probably has a disability that's going to result in them being able to qualify for CPP disability. We're actually going to tell them that they have to qualify for CPP disability. This is very normal with contracts for individual and group disability insurance. So the insurer will now say, hey, you have to go apply for this benefit. If you don't, we're going to cut you off. And that's right in the contract. That's something that we assume is going to happen. On top of that, it wouldn't be uncommon to get your CPP disability benefits back to when you originally qualified here, and in that case the insurer will subrogate those benefits. That is, they will take those benefits because they'll say, hey, we were paying you a disability benefit, now you're going to basically get that made up to you. That doesn't make a lot of sense. So most, but not all, disability contracts are going to provide something like this, where you were getting $3,000 a month and now you qualify for CPP disability. So what's going to happen is the disability insurer says, no, we're done with that. We're going to pay you now $3,000 less this $1,200. So we're going to pay you $1,800 a month from your DI contract. Plus, you're also getting the $1,200 a month from your CPP, so you're still getting your full $3,000 a month, just that now you're getting it from two sources. Now, one sort of side effect here is that the $1,800 a month that we see here, the amount from the DI contract, is most likely tax-free unless this was an employer-paid DI contract. The $1,200 a month here from CPP, that's taxable. In reality, that's probably not a big deal. If you're only making that $1,200 a month of taxable income from CPP, that's not going to put you in a position where you're going to actually end up paying any income tax. So now let's look at the sort of sequence or the order in which this happens. Now, this is more a set of principles than a set of hard and fast rules. So it doesn't necessarily always work exactly like I'm going to show you, but roughly here's how this breaks down. That most disability benefits will look to Canada Pension Plan as first payor. That is, if you're collecting a CPP benefit, that's the benefit that's going to supersede anything else. And then most benefits will look to WCB as first payor, except WCB looks to CPP as first payor. And then we have EI. Now, EI and WCB are sort of interchangeable here. Keep in mind, EI is a very short-term type of benefit, so it's not generally that big a deal as far as its first payor status. We then have a fourth source of benefits, one that we don't get too wrapped up in, but it actually does provide some disability benefits, and it is considered first payor by the next two types of contracts we'll look at. The next we have is any group benefits. So if you have your group disability contract, basically your group disability contract says, hey, first, are you getting benefits from an auto policy? If you are, we're going to reduce your benefits. Are you getting benefits from CPP? If you are, we're going to reduce your benefits. Are you getting benefits from WCB? If you are, we're going to reduce your benefits. If you're getting benefits from group, actually that's going to, though, reduce your EI. So this actually works in the opposite order, where EI would actually cause your group benefits would actually cause an offset against your EI. So like I said, it's not always perfect, the sequence, but that's roughly representative. And then, of course, the last payor for most types of contracts is your individual disability insurance contracts, which generally have provisions in them that say if you're getting benefits from any of these top 5 sources, we're going to reduce your income accordingly. There are some disability contracts that will say, for example, for the first 2 years, we're not going to have any offset against your CPP. So a lot of contracts will say for 2 years you can collect individual DI and CPP, but after that we're going to start that offset. So lots of different contractual provisions, and that's sort of the important thing to recognize here, is that this is in most cases contract specific, and that's where you do have to read your disability contract to know exactly what you're dealing with. That's very common with disability insurance in general. There's not a lot of sort of hard and fast rules that apply to disability insurance universally right across the board. Instead, almost everything we get into that's sort of the actual functioning of a disability contract comes very much down to that contract. I hope that helps. I hope that doesn't create any additional confusion. It is a fairly convoluted topic, and it's one that in real life really does have a lot of different possible iterations and outcomes, but having this sort of broad understanding of it will help you, and this will serve you well for exam purposes. Really, for exam purposes, the thing you're most likely to see is going to be this specific question, this CPP and disability contract type of question. So that's a very common type of exam question, and the reason for that really is because it's probably the most common real life scenario, and there is a fairly substantial actually body of case law and contract wording to back that up. So I hope that helps to understand how the coordination of benefits for disability contracts works. Like I said, a fairly complex idea simply because it works so many different ways from scenario to scenario, but this should help you to get through your exams and even to understand some real life scenarios.